Dear investor, Nuvama Private is pleased to present to you the latest issue of Investment Strategy Report for February 2023. Let's take a look at key highlights of January 2023. Union Budget for Financial Year 24 is focused on the 7 priorities, also called as Saptarishi. Financial Year 24 Union Budget is a realistic budget with achievable goals and fiscal deficit as a percent of GDP estimated at 5.9% for Financial Year 24. Union Budget 23-24 can be aptly termed as adoption of a new growth template led by vital capex allocation to drive the economy. Government has allocated Rs 10 lakh crore capital investment to enhance growth potential and job creation, and this could provide a cushion against global headwinds. On the India macro side, aggregate demand indicators are showing mixed signals of recovery. GST collections was recorded as the second highest in January 23, and e-way bills were at an all-time high, indicating green shoots in aggregate demand in the economy. However, the investment projects completed by the private sector has been declining continuously, while supply-side recovery is still in a nascent stage. Labour markets witnessed some relief in January 2023, and MNREGA spending is likely to moderate in Financial Year 24. Globally, the economic activities remain subdued as manufacturing and services PMI see a drastic slowdown. But India is in a better position to navigate global spillovers according to IMF. The inflationary pressures seem to be easing in the majority of the developed economies and developing economies. This may lead to slowdown in rate hike cycle globally. The Indian equity markets witnessed some correction given the market volatility. FIIs continue on a selling spree, DIIs inflow increases. At the current market valuations, the quantitative model is signaling at underweight allocation to equities, primarily due to yield gap being skewed towards debt allocation. Globally, early signs of disinflation have started to appear. Hence, market forces are expecting another 25 basis points rate hike by Fed, followed by a pause. In India, some of the demand-side indicators have started to lose momentum. Private capex and credit cycle have started to moderate. FIIs have been continuing their selling spree. In short term, markets are expected to remain range-bound, though possibility of larger corrections may not be ruled out. In current volatile situation, we change our stance on equities from neutral to underweight. CPI and WPI continues to drop sharply and within the RBI corridor. In the MPC meeting, RBI raised the repo rate by 25 basis points as concerns on inflation continues, especially as core inflation remains sticky and elevated. The stance remained unchanged at withdrawal of accommodation. Financial Year 23 GDP growth estimate increased to 7% from 6.8% and at 6.4% for 23-24. RBI projects retail inflation lower at 6.5% for Financial Year 23 from 6.7%, 5.3% for Financial Year 24. Significantly, due to global market dynamics, given the flatness of the curve, it'll be prudent to invest in medium duration offering favorable risk-reward.